Good afternoon. This is Tom Alexander. This is the stock market weekend update for the week of July 7th. Today is Friday, July the 4th. Happy Friday. Happy 4th of July. It's a big day. Before I head off to celebrate, I want to do this update. It's actually been a rather interesting day in the markets if you've been paying attention. Now, hopefully, you had better things to do. Unfortunately, I did not, so I've been paying attention. We'll get into that. Let's move over to the charts and look at what's going on. Okay, we're going to start with the profile view of the SPX weekly chart. Each of these profile units, each profile is 1 quarter's trade, 12 weeks. We just began the third quarter. The second quarter has been epically vertical. I have been covering this consistently for 6 or 7 weeks. You can go back. Let me just show you that real quickly. You can go to alexandertrading.com, click on weekly update, and you can get all the charts for today. You can download a PDF that has the charts, and you can also go back to previous weekend reports, and you can see the progression in particular of this auction, this profile unit. So this is where we are. Whoops. We are on my home screen, and we need to be here now. That's better. Okay, so again, we have just completed an auction that, as defined in this time frame, is extraordinarily vertical. The auction process is in effect in all degrees of time all the time, regardless of how you slice it. But when you compare apples to apples here, meaning these profile units, these quarterly units to quarterly units, you can see how vertical this unit has been, this time frame has been. Now we have just begun again the third quarter. This includes all of the trading for July. This will be the first. Monday will start a new letter, a new bar, so to speak. But this is cash market information. So inferring how markets typically develop from how this market has developed since the end of April, one would conclude we're going to have a more rotational market. You're very likely to have a fatter node within this structure than that of the last quarter. Again, I don't recall a quarter more vertical and less rotational on a day-to-day, week-to-week basis than the one we're coming out of. Are we going to go higher? Very well may, but we're not going to go higher at the same rate of change that we went up through to this point since the bottom of April. That's not going to happen. Now, something else I want to show, and I don't want to get too deep in the weeds here on market profile because I know most of you really don't care. But for those of you that do, this has been a fascinating lesson in the most effective use of market profile, how to use market profile. And that is to identify market condition. The market condition we have is trend, it's vertical. Now, again, we have the chronologically defined unit here of quarters, but you can't really confine the auction to a given time frame. The auction process is in effect in all degrees of time all the time. So within each of these units, you have different auctions themselves. For instance, we have an auction right now. Let me see if I can do this. Okay, perfect. So really, this distribution began back on, I put it in the report a few days ago, July 9th, maybe. Again, let me see. Let me go to the report and I'll tell you. When did this auction begin? Well, it began 9 trade days ago. These are weeks, remember. So 9 trade days ago, we began another distribution. A distribution is a range that is developed within the auction process. A distribution implies verticality. That's usually what sets a range, is the vertical function of the auction. And this is already its own auction as we head into next week. So this is just, it's, to me, it's fascinating to follow those of you that are interested in market profile. I try to include something about market profile in each weekend report for those of you that care about it. It can be an incredibly helpful tool in helping to identify market condition, and that can help one down the line, down the stream, with strategies and tactics how to trade it. And that's true whether you are swing trader, position trader, or a day trader. Okay. All right. So let's look now at each of the indices. And this is as of Friday's cash close. We're going to get into what has occurred in Globex trading since the cash close before we end this. But for now, the SPX is up almost 30%, or right at 30% from print low to print high, from the print low in April to Friday's print high. As of Friday's high, we were up about 5.75% from this low. It's just been a torrid, relentless rally. The levels that you see on the chart are the most important levels as we head into trade next week. All right, that's the SPX. We'll take a look, just go down the line here. Here's the NDX, very similar view as the SPX, as one would expect. The New York Composite is also in the new high ground, all-time new high ground club. The NASDAQ Composite is in the new all-time high club, as you can see. And now our laggers, including, we'll start with the Dow, which is not that far from a new all-time high. And then the equal weight S&P is just below its all-time high, a little more than 1.5%. And of course, the Russell, which is a veritable lifetime away from a new all-time high. So that's your rundown of these indices. And again, these charts are all on the website. If I'm going too fast, you can also go to the website and download a PDF if you want to print these out. Okay, let's take a look at a couple of other things. Let's look at the internals here. Okay, I landed on VIX. And if you notice down here, let me go to, let me grab a tool here, okay? And if you look at VIX at this high, look, here, 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 and here. And now this is today, okay? VIX spiked up today, but until today, even if you don't factor that in, VIX has been relatively elevated, even as we have just been screaming higher. So that was a heads up as to what actually just occurred in Globex trade beginning at the close on Friday. And again, we'll get to that in just a minute. So back to regularly scheduled programming here. Now let's take a look at breadth. Breadth is also quite interesting. Market internals. Now I used NYSE data. What you see here, the red line is a 10 period, in this case, 10-day moving average of NYSE advancing issues. The green is its 5-day moving average of NYSE advancing issues. Breadth is breadth. Breadth is closing the net closing NYSE AD line. Okay. Now we just had six consecutive up closes in breadth. The last time we had 6 consecutive up closes in breadth was back here. I also highlighted this in the report. I don't have it highlighted on my screen. But the takeaway from this is you have to put this information in context. And it's one thing when this information is coming off of a very sharp low and you reach this upper extreme in the moving average of breadth. It's quite another thing when you're up 30%. And again, you're up here in the lower cusp of an extreme reading in breadth. Now, this cannot be rotated. This is a heads up. But if you go back and you look, and I highlighted this in the report again, if you go back and you look at these previous times, now this was coming off of just an extreme downside compressed condition. So this quote unquote overbought reading was reflective of the fact that this was an important low. And you can go back and listen. I said at the time this likely had far more to run, and you could not depend on this. Now this rally is so long in the tooth. This is quite extreme. It's a heads up. If you go back and you look at previous extremes in this, very close to a top here, very close to a top here, very close to a short-term top and sideways action here, even over here, coming off this low. We basically went net sideways for a couple of weeks. And I can go back, way back, and show you the same things. When this thing gets to an upper extreme, you want to make note of it and put it in the context of where it has come from. So could we continue to go higher? Absolutely, we could. It is extremely unlikely we're going to go higher at the same rate of change that we have traveled, in which we have traveled since the low from April and the low of June 23rd, which is right here on the screen. Okay. Now, another particular view of breadth that's interesting that I use in intraday trading. This is a 30-minute chart. This is the SPX. And we have just huge, huge, huge divergences now between the momentum peak right here and how price has ramped higher into Friday's close. Now, let's take a look at something really interesting here. Here are the futures contracts. And futures trade, yeah, okay. So this reflects the trade from the close on Thursday into today's close that occurred about an hour and 15 minutes ago. And let's just split out the ES here. And if we take a look at this from Friday's close to the Globex close, you're down about 6-8%. And you can also see we are in the neighborhood of Friday's low. And then you stair step lower. This is so vertical that, you know, I tend to use the levels generated on the cash charts because they're more consistent, they're more reliable, and it reflects the larger market and what's going on. And again, those were on the charts that I just showed you. They're also in the report that you can access from the website and the PDF that you can download from this weekend's update that is on the website. So guys, I hope you have a wonderful 4th of July. Do me a big favor. If you have not subscribed to the channel, please subscribe. It helps me a lot. I have some really cool stuff coming down the pike. I need to get to 1,000 subscribers. So help me out. If you haven't subscribed to the channel, please do so. Like, make comments, etc. You guys have a wonderful 4th of July. And I will be speaking with you very soon, at the latest next weekend.